Hi students, welcome to the video on Management Accounting Cash Flow Statement. In the previous video, we have discussed what is cash flow statement. So cash flow statement is a statement of inflow and outflow of cash. Inflow means the cash is generating and coming to the business, that is sources of cash. Then outflow means usage or application of cash. That includes both cash and cash equivalents. Cash means cash in hand and demand deposit with the bank. And cash equivalents are short-term investment in security which can be realized into cash or converted into cash without loss of value. So in this video, we will solve one problem relating to operating activity. There are three types of activity. One is operating activity, second is investment activity, third is financing activity. In the operating activity, it takes into consideration the cash received from the customer or cash paid to the supplier and the employees and other commission received, then tax. But in the investment activity, it includes purchase of fixed assets, that is land and building, plant and machinery, furniture, fixture, equipments, computers. Then that is when we purchase, that is outflow of cash. When we sell, that will be inflow of cash. Sale of assets, that is inflow of cash. Then in finance activity, we include issue of shares by the company. It may be equity share or preference share. Then issue of debentures by the company. So debentures are creditors of the company. Then suppose company in need of funds, it can get its finance from the finance institute or banks, etc. So here, from the following information, we have to calculate cash flow from operating activity. Here, cash sales for the year is given 7 lakh. That you know. When we sell the goods for cash, definitely, immediately cash is generated to the business, or there is inflow of cash, or check is coming to the business. Then on the credit sales, the cash will be realized from our sundry debtor or bills receivable parties in terms of cash within a period, agreed period of say 1 month or 2 months, whatever that may be. Then cash purchase for the year is given 5 lakh. Net credit purchase for the year is given 26 lakh. At the time of purchase of goods by cash, immediately we will issue check to the supplier or the party. Then that will be outflow of cash. Similarly, for net credit purchase, the supplier will give us time 1 month or 2 month period for repayment of his liability. Then that is inflow of cash, outflow of cash within 1 or 2 months. Then total office and administrative expenses for the year. This is the expenses we have incurred for maintenance of office and payment to our employees and all other direct and indirect expenses in the business. So that is outflow of cash. Then commission received during the year, it is shown in the profit and loss account credit side, and it is sources of funds. It is inflow of cash. Then provision for income tax, every year and from out of net profit we have to keep certain provision for payment of income tax. Say it is 20% or 15% as per the norms. Then in the below it is given, this is the balance sheet, that is within the balance sheet, and in case of cash flow statement we have to consider the opening balance and the closing balance. In the opening balance, that is on 31st March 2022 means 1st April 2022 trade receivable was 4 lakh. At the end of the year, that is 31st March 2023, it is 4,50,000. Similarly, trade creditor at the beginning, that is 31st March 2022 or 1st April 2022 is 7,50,000, and closing date is 31st March, it is 1,50,000. Then prepaid office and administrative expenses 25,000 at the beginning of the year, that is on 31st March 2022 or 1st April 2022. On 31st March 2023, it is 65,000. Then outstanding office and administrative expenses, at the beginning it is 45,000, at the end it is 15,000. Then provision for income tax as on 31st March 2022, that is on 1st April 2022, it is opening 50,000, and closing balance on 31st March 2023, it is 60,000. So we have to calculate the net cash generated from the operation, whether there is excess of inflow over outflow or excess of outflow over inflow. Then here in this case, first we will consider preparation of cash flow statement. First, cash received from customers. It is written cash sales 7 lakh, net credit sales 30 lakh. Net credit sales means sales or goods sold on credit basis less sales return or return inward. The net is 38 lakhs. So total sales during the year is 45 lakhs. So cash received from customer out of sales 45 lakhs. Then opening trade receivables was, that means previous year it was closing stock and this year it is opening stock. Trade receivable at the beginning was 4 lakh. We are supposed to receive 4 lakh from the parties. So plus opening trade receivables. This is 4 lakh minus, that is outstanding at the end, that is minus closing trade receivables. $4,50,000. So net is 44,50,000. Then another commission received during the year, it is also inflow of cash. So cash received for what's commission? Cash received, that is cash and cash equivalent. Cash received in terms of commission. So it is inflow of cash, that is 1 lakh. So total inflow of cash of the business is 45,50,000. Then we will consider purchase. Here cash purchase is 5 lakh, net credit purchase means purchase less return, that is purchase return or return outward. That means 31 lakhs. So purchases 31 lakhs. Then trade creditor means our supplier. Opening supplier was 7,50,000. This year we purchase, our total purchase comes to 31 lakh at opening trade creditors. It is 7,50,000 plus less closing trade creditors. $1,50,000. So it is 37 lakhs. So we deduct it, we get it. $8,50,000. Then another total office and administrative expenses. So office and cash paid towards office and administrative expenses. It was 2,20,000. Then prepaid office and administrative expense. That means our business has paid 25,000 extra last year. So this year it will be deducted. And closing prepaid means prepaid office and administrative expense. We have paid 65,000 advance. So plus prepaid expenses at the end of 31st March 2021, it is 65,000 minus opening prepaid expenses. This is closing, then opening prepaid expenses. Opening prepaid minus 25,000. Then this is minus. Then it is given outstanding office and administrative expenses. At the beginning, 45,000 was outstanding in the previous year. This year we have to pay. So 2 plus opening outstanding office and administrative expenses. Outstanding office and expense, that is 45,000 minus closing outstanding expenses 15,000. So it is 40 or 30, 70, 2,90,000. 2,90,000. Then this is generation of cash. Generation of cash from business. This is how much? 0, 0, 0, then 0, 6, then 5. 5,60,000. So 5,60,000 generation of cash from the business. On that we have to pay less tax. Cash paid towards tax. Towards tax. So in this case, the provision for income tax during the year, provision during the year, provision for 2022 of this is 2 lakhs at opening outstanding of tax. Opening outstanding of tax. This is 50,000 less closing outstanding of tax. Then closing outstanding of tax. this is minus 60,000. So net is 1,90,000. So 5,60,000 minus 1,90,000. So net result is net cash. This is inflow. This is net cash generated from business. Generated from business from operating activities. From operating activities is 5,60,000 minus 1,90,000, 0,000,073. 3,70,000 is the answer. So thank you for watching this video. In the next video, this is a direct method of calculation of inflow and outflow cash or cash flow statement under operating activity. In the next video, we will discuss or we will cover also the inflow or outflow of cash from investment activity and finance activity.